Hi guys, and welcome to another edition of Talking Finance with myself. Today's guest is Drummond from Gateway Bank, as well as Arun Gupta from Gateway Bank. Guys, how are you today? All things
Very well.
considered, obviously.
Yep.
We're all in lockdown. You guys in New South Wales, I'm here in Victoria. But thanks to Zoom, we're still able to make this conversation. But once again, I'd just like to say thank you for joining me today. Obviously, because I'd love to get your views on the world, obviously, and what else is happening with Gateway. So I think what I'd love to talk about first is some changes with Genworth.
Yes, absolutely. So earlier this year, Gateway, in conjunction with Genworth, was the first bank in Australia to offer monthly LMI, which simply allows borrowers to pay their LMI premium monthly instead of as an upfront payment, Dan. So this is particularly useful for borrowers with strong serviceability, but struggling to save for their deposit. This also enables borrowers to borrow up to 95% of the property value and not have to capitalize LMI into their loan.
That's pretty awesome.
Yes, absolutely. And this is also a great option if the borrowers receive a lump sum or bonus as the monthly payments will automatically cease once the property's loan to value ratio has fallen below 80%.
Oh, wow. Okay, that's pretty awesome.
Yes, absolutely. And, for customers buying properties in high growth areas, especially during these times, if it works, it probably can work for them as well.
Yeah. Now, I believe there's a few other small changes to Genworth with regards to the LMI itself that is it's pretty good news, isn't it? In terms of the capping, I believe, in terms of dollar value, is that right?
Oh, absolutely. Yes, so I think it is still to be implemented, but we have had an update from Genworth. I think the policy previously was for loans, for owner-occupied loans between 80 to 90%, it was capped at 1.5 mil. For loans between 90 to 95%, it was capped at 1.15 mil loan amount. However, I think moving forward, they're gonna open this bracket up to a maximum of $5 million, I believe.
Yeah, I think is that in response to how well the property market's going. Just as a guess, because obviously it's bizarre. We're in COVID, everyone's locked down. People, there's lots of chatter about people losing jobs and so forth. But yet the property market's gone the exact opposite direction of what everyone thought it was.
It has, and probably if you could add something there.
Yeah, I think, if you put yourself in Genworth's shoes, right, like reduce or limiting or eliminating some of that cap, at 1.15 million, if you think and focus just on Sydney, by example, how many houses can you buy in Sydney with a $1.15 million borrow kind of thing? I'd suggest that the average is far greater than that. So, with their move to increase it to an aggregate position, so 5 million total exposure, that means that those customers that are looking to purchase premium properties, and particularly just Sydney average, really, can now participate in LMI schemes being monthly or capitalized, which is really exciting for us because, off the back of monthly LMI, we have had to, turn down some business because it was over those caps, because there is interest from, more complex borrowers, and certainly those in the more premium property market. And now this is kind of a gate open for them, which I think is really exciting. So those changes come through in a month's time. So I think it's the 18th of September that'll come through. And it's really exciting times for us because we're still the only bank in Australia that can offer monthly LMI. So I think there's a great opportunity for us to help customers and brokers find suitable product and lender for their customers, which I think is absolutely awesome. And yeah, the market is going absolutely bonkers and continues to do so in light of COVID. We're still seeing, clearance rates remain high. Sure, auction numbers themselves are down slightly, particularly in Sydney, as you'd expect. but still the demand is certainly there for property, which is really encouraging, I think, for us all.
Yeah, absolutely. Especially if you're a homeowner, and you're,
Looking down the barrel of a 30% gain's not bad either. Yeah, that'd be
no,
all right.
yeah, it's not bad, but at the same time, it's also very scary because when you sell, well, you're only gaining if you completely sell and go somewhere else, right? So, and Sydney's just becoming more and more expensive every second, really, isn't it? So.
It's certainly not the kind of environment where you want to find yourself out of the market for too long if you have intentions of buying again. We're seeing a little bit more activity and interest in bridging loans and things like that as well, which I think is interesting. You come from a low consumer confidence perspective, and bridging is seen as something that's certainly a little bit more risky. But in the current environment, it's certainly more interest from that because people just don't want to be left out of the market with it running away from them at a pace they can't possibly keep up with.
Now on that, do you guys offer a bridging product?
We do, absolutely.
Fantastic.
We look for bridging facilities we can entertain need to have a residual debt position, just because of the way that we structure them. We don't really do others unless they're for our existing clientele, long-standing members and things like that. We'll entertain
them. Now, another thing that came on in the media in the last couple of weeks was this big, I suppose you can call it, regards to the report about the environment itself and how dire the situation is, right? So now, we've got our Prime Minister, or the current government, not really wanting to commit to an emissions target. Well, that's how it reads anyway. But then, obviously there is an article that was out about a week ago but in the AFR as well, which is, it's going to be harder to, I suppose, either get credit or businesses that don't, how to put it, they'll get punished if they don't act in a behave in a way which is, I suppose, good for the environment. And some banks and some institutions now are looking at a situation where they'll only invest and do things which I suppose gives them a good footprint towards the environment. You guys, a Gateway Bank, you guys have a pocket the planet philosophy. So and this is way before the report even came out. So could I just ask a quick moment in terms of what that means to you guys, and how obviously a broker, I suppose, could keep that in mind when they do have a client that comes up to them, because obviously some clients are not going to care about the rate, they're not going to care about the product, they care about the businesses which they align themselves with, based on a philosophy of looking after the earth.
Pocket and Planet for us has been such a the linchpin of our strategy and our purpose for a couple of years now. So ahead of the reports and ahead of what seems to be now more a call to arms, for lack of a turn of phrase. It's something that we've believed in and have been very determined to do and do properly. So we see institutions now coming to market, not just in financial services, that are calling this out as something that they want to do. And it's easy to say you want to do it, but to actually go through and do it and stand for it is actually a lot more challenging than I think people realize, particularly external. You can't half do Pocket and Planet. You can't half do ethical lending, banking, investment. You have to be the whole way in, is my opinion. And I think it's probably an opinion shared by those people that are really passionate about these causes. We've had to be really staunch in our approach to what we will and won't do, and unwavering and very open and honest with ourselves about, we're prepared to make these decisions and we will have to stand with it. It takes determination and a little bit of bravery, I think, to stand by it, to know that you aren't going to do every deal under the sun. You won't make money if it's in relation to one of these things that we've deemed to be less than ethical. And that's a great place to be, because it fills us with confidence that we know we're doing the right thing. And it's, it's not something that we're going to be wavering in either. So for us, it's kind of core to everything that we do. And, moving forward, it actually becomes more challenging, I think, because we've drawn a line in the sand to say, we won't do this, we won't do that. This is what we're interested in. And we have to make sure that that's exactly what we adhere to. But you also need to improve year on year. And so you set this benchmark of where you are currently, and then to try and improve from there. And, for us being a relatively small institution, our footprint and our carbon footprint is not huge by any stretch of the imagination, but then to continuously make improvements, it's going to become more and more difficult to demonstrate that we are continuing to improve what we do from an operational standpoint. Certainly a challenge we're up for, and what a great problem to have. But it's going to be a really interesting time. And it's going to be really interesting for us to see competitors and other institutions around the country, around the world, try and make some improvement in here. And it'll be really interesting to see how they manage to do it. And, I'm really interested in the community aspects of what we do in this, and how we can help each other as well. So it's not just, it's Gateway, we're doing really well from an ethical perspective. It's like, well, yeah, that's good, but what do you actually do with that? And how do you influence other areas, other partners? How do you find like-minded institutions to partner with to continue on that trajectory, and also to improve the planet as well, kind of thing? It's, it's a bigger than, it's the sum of all parts kind of thing.
I find it really, really cool in a sense what you guys have done with your green home loans, and I do apologize if I said it wrong as well. But you see other institutions, I mean, the way that they're trying to hook the clients in is by going, hey, you get a home loan, but you have to borrow a certain amount here, and if you get a credit card as well, and so forth, you lash onto that, and only then will you get a reasonably good rate. Whereas you guys are going, we'll give you a product which is, as long as the use of it is towards something like, I suppose towards improving the sustainability of your home, and going to, the emissions and so forth coming out of it, like, going towards solar energy or solar water and so forth, or the house is actually quite efficient. You give the client a better rate that way, which is, I suppose, it's unique, and it's totally different from the usual capitalist idea of going, we'll give you a good deal, but you have to take a mountain of other products from us. Is that the way I've described it?
It's like, so, I was saying, you don't want to help influence kind of thing, and it's greater than just us kind of thing. We need to help people do the right thing as well. And it's, it's particularly challenging for some people, I think, they want to do the right thing, but doing the right thing shouldn't cost them more than it costs somebody else, kind of thing. So we've tried to link it back to, we'll help you. You align with the purpose, then that's enough. Let's go. We'll sort out the correct product for you. It's not if you do this for us, we'll do this for you kind of thing. It's if you do this for the environment, and we acknowledge that might be bigger and greater than what we're trying to do. If you do that, then we'd like to support you in doing it, and enable you to make the right decisions.
Yeah, I'll just close off this particular product subject anyway by saying that we're in the midst of a COVID fight. We're being told by government leaders and so forth that we need to listen to smart scientists, smart people to how to combat this, right? But yet, with regards to the environment, scientists have been talking about this for 50 years. 50 years, and yet we, because maybe the threat doesn't seem to be so imminent, that we're just so blasé about it. But what you guys are doing is pretty damn cool. So I applaud you guys on that one. Now, another thing that you guys are doing really well is regards to your turnaround times, right? So I think that needs to be said, only because I keep on saying within the group, it's not about how cheap the product is, but if the lender that you are dealing with doesn't make you look good, your clients are going to think you look stupid, right? So can you tell me a little bit of that? I'll pick on you, Arun, on this one. turnaround times? What are they currently with you guys, and how have you guys managed to keep it that way?
Sure. Mate, at the moment, we are on 2 days only, so pretty quick. SLAs have been a pretty hot topic in recent weeks, with examples of faster turnaround times being delivered through branch channels than broker channel. This coupled with new entrants coming to the market, promising a decision in minutes, and some established lenders talking weeks for a first look. At Gateway Bank, we have a real focus on our turnaround times, and we pride ourselves on a couple of key factors. We have no channel conflict whatsoever. So with no branch footprint to service, we treat our broker channel exactly as we treat our own. So we just see a customer that needs a solution no matter what channel they have come through. Applications are always looked at by a human. They're fully assessed. While there's a time and place for automated decisioning, we believe in the human element to get to understand their needs and objectives and how we can support them. A pre-approval from Gateway really means something.
So all your pre-approvals are fully assessed?
Yes, they are fully assessed. Yep. Yes. Yep.
Okay, that's pretty valuable, especially in this, how do I put it, very heated property environment, right? Given now that everyone else is also on these time limits as well, because we're all stuck from home to get things done. So it's sort of like, are you I suppose, are you afraid that other people are going to use you guys just to get that pre-approval but not settle with you guys?
Yeah, that's absolutely something that's likely to happen. But our strategy is to delight on first experience, right? So if someone wants to use us to shore up their customer position and then they can shop it around afterward, that's okay. But my hope is that their exposure and their experience with Gateway will lead them to submit another deal that perhaps does suit for their customer, kind of thing. And it's so hotly contested, the conditional approval, no conditional approval, do you do it, do you not, kind of thing. And it's something we have to spend a great deal of time thinking about. But from my perspective, I look at the broad range and probably the majority of brokers. Will the majority of brokers shop us around on a conditional approval? I don't think so. I think they'll do the right thing for their customer. They're certainly not of the interest in replicating or duplicating work and effort on their own part, kind of thing. And look, if some do, then hopefully they have such a good experience with us anyway that they look to place another deal with us.
I'm just going to add to that. In the old days, when your credit report can't be seen by other lenders and so forth, it didn't really matter much, right? But now if you do that, you're going to mess your clients up. So don't.
We do know. It's nothing, no secrets, no hidden cloak and dagger stuff. We know.
Yeah. And that goes with regards to the issue of LMI as well. Do you guys have your own DLAs up to a certain level as well, or does some things get sent to LMI and then that's another credit hit?
Yeah. So with any LMI application, it has to go to Genworth. So we use Genworth as our LMI provider, and it needs to be reviewed by them for conditional and for formal as well.
Okay.
But wouldn't show on their credit report. It's a single inquiry from Gateway Bank, regardless of whether it's insured or insured.
So, Fields, that's something that is we almost get one post a week about it. Who's got it? Who's got places, right? And it almost like it continues with regards to, follows any government announcements that they're going to have an extra X amount of filled places available as well. How do you guys deal with that? And how do you guys see that at the moment?
Well, we have had overwhelming response from brokers in regards to our participation in the first home loan deposit scheme starting January 2020. We have had success around the applications, and at this stage we have got plenty spots available across all three schemes, which being the first home loan deposit scheme for established homes, NHG, that's New Home Guarantee for newly constructed dwellings and land and construction, etc. And also to support the family home guarantee for single parents with 2% deposit. We have had overwhelming interest from brokers in regards to it, and we've got a lot of applications in place now as well that we are currently looking at. And the beauty about this is that we price them as if they were at 80%, even though the actual borrowings may be at 95 or 98%. So at the end of the day, customers are not only getting benefited by the scheme, but by better pricing as well.
As well as the monthly LMI to boot too. Yeah.
Correct. So that's basically an alternate that has come in really handy for applications that may not fit the criteria under the scheme. And as long as they've got strong servicing and the customers can service the monthly LMI payments, that definitely has been used as alternate for a lot of applications. Yeah.
Okay, so what's a broker do? So should they call up the Gateway BDM to go, hey, do you have a place, or is there like a portal they can just go up, or an email that just click through somewhere central to go, is there a place? Because it just seems like that, like no one knows who's got a place and who's got a place available, and which is why you're getting it's almost like a constant same question being asked.
We generally would send out an EDM, mentioning that we've got spots availability. However, brokers have the opportunity to go and visit our broker portal on our website, and that has the form to request for a spot to be reserved. However, if they want to be sure, or if they're not, if they don't have that information on hand in regards to the availability, they can always reach out through to us at Gateway, and we can help them. At this stage, I've looked up the spots availability. We've got plenty at this stage. So if brokers want, just ask them to reach out through to us.